Welcome to our webinar on the multiple time frame price action indicator, move over ADX. The reason why we think it's time for ADX to be trashed and forgotten about is that price action is so far superior. It doesn't have the lag, it's much more accurate, it has much more information, and ADX just is not an effective indicator. So we want to show you why the price action indicator is such a superior item. Here we are with the ADX line. This is the standard ADX, and it's that yellow line. There's usually some kind of a threshold. Now, different authors will talk about it being at 25 or 20 or 15, whatever. We've used kind of the middle of the road as 20. So, in generally, it's talked about if it's above that threshold, you have a more of a trending market, and if it's below that threshold, you have more of a consolidating market, which in a vast generality type of way, that is accurate. But probably the best way to read the ADX is when the ADX is rising, then you have a trend. You really can't know that it's a trend when it's in the recovery process and moving back down to a low area. That's what we call the long recovery process, and ADX is kind of blind during that period. So here it is. We get into it's above the threshold. It begins to rise, and it doesn't tell a direction. It just says that you have a trend. So you have to use the DMI plus or minus or something else to tell you that it's a short. So we know it's a short here, and we get into the trade right there. This yellow line is matches the ADX. And then there's our exit right here on that bar. So the beginning of the next bar, we do the exit. So there's your profit on your trade. Okay. Now it's dropping this whole time, and here it's rising. It goes above our threshold. So now it's time to get into the trade. We get in at the start of the next bar, and here it is for the exit, and we get out at the start of the next bar here. So we have a losing trade right there. So a losing trade. Now the next one is it starts rising here and it stops rising here. So we basically have that bar, so we get in a short at the end of that bar, and we get out on the next bar after that one for pretty much a break-even type of trade. Now it's telling us it's not trending, stay out of the market, and then you have the situation where it rises above this threshold and it's on the rise, and we take a short trade at the beginning of the next bar, and it stops, so we exit at the beginning of the next bar for a very minor profit on that one. Now this is the recovery cycle, and then it starts to rise again, so we get a trade. This time it's actually a long trade, and the ADX would have told us to get in on that bar right there, which the yellow line would have been the start of the next bar. We would have had a small profit trade right there. So there's the ADX. Now what we want to compare it to is our price action indicator. The price action is just one of the lines off of our multiple time frame price action, which is really the greatest trading edge, but we want to show you why this is so effective. And this is what we call the equivalent of our chart line. So on our multiple time frame, whatever the chart time frame is what this line will look like. Now we normally have it red and green, but because we were overlaying it on the price bars and we wanted to be able to see it different, we did it dark green and dark red. But here with this indicator, it basically turns to the dark red, telling us it's in a downward trend, and it tells us about the same time as the ADX is rising. So we're just going to say we get in at the same time. Now we're using the cyan lines for this one, and it goes down, makes this trade, and then it stops. Now you could say, well, we see this green here, and maybe that's where we exit. Okay, that's fine. We exit whether it be here or whether it be up here after that turns green. either one, give it the benefit of the doubt, which one has the best trade results. Now we have another little red push that's shown there, and then it goes to the green status. So let's go long now. Okay, so we went long right here and go up one bar, and then basically it gives us a nice up move, and we exit the trade about the same kind of place as where this occurred, but you know, which one makes the most profit? A losing trade here or a nice winning trade here? Now this is telling us to go short, and you can see this tells us not only the direction of the trade by the color and the way the line's going, but also the strength. The strength is told by how fat it gets. So you can see that it actually tells us that it's a short trade at this point right here, but it's getting fat, and it's getting fatter, and then the fattest is down here. That tells the strength of the trend. So ADX shows the strength of the trend in the rise, but this shows it in the line along with the price direction. So we get into the trade, and we get out about the same time as what the ADX does on this one, you know, right there. So here we have a nice winning trade versus about a break-even trade. Now ADX tells you to ignore all this because it's not trending, and yet here we have a nice move down. You can see that it has some nice strong pushes with some little weaknesses in it, but basically that's a downward move, and it's perfectly tradable. You know, you don't really have any pullbacks into it until you get this fat line, and so maybe you exit, but it's definitely a trade that can make a little bit of money. Then you get a little push up, and you get another down move. So here it actually gets it earlier. So you get in earlier with the price action line, and ends up being a little more of a profitable trade than just barely making a little bit of money. And the same thing here. Here our price line gets in several bars earlier rather than this one, which also results in a little bit more of a profit. So overall, this shows why the price action line is such a superior product, because it shows you the directionality with the color, and it doesn't do this up and then this recovery thing. It shows you the direction the whole time the direction is going down. And it basically shows you there's the bottom, and then you get an up push. There's the top, then you get a down push. A little up push, and then a down push, a very minor up push, down, and then an up push. So it's much superior in that it's telling you the price direction all the time, and it does it very effectively with very little lag. And I want to show you the effect. If I take and drag this up on the price chart itself, you'll see how during the downward moves, see how the price is below it, a little bit of a pullback there, but basically below it the whole time till it starts getting above, and that's the weakening of the trade, and then it finds the bottom. And now you can see during the up push how the majority of the time it's above that. It crosses over for the down push, crosses over for the up push. The price kind of matches for this slowly descending period. It crosses over for the down push. And you can see that the fat line is telling us when we have these nice strong pushes in what direction. So you can use this on your chart like this. You can use it in a subgraph, whatever you prefer. But we want to show you one other thing. Here is in the multiple time frame indicator, which is here, along with our multiple time frame price action, our fractal channel, that's this line. So our daily multiple time frame price fractal shows us we're in a downtrend in this US dollar Swiss franc since 12/8, you know, at least what's shown on this chart. We're in this downtrend on the fractal all the way, and this is the daily fractal support resistance. And then you can see the multiple time frame price indicator is in a downward move, and you can see the pullbacks. This is showing the price pullbacks during periods like this, Okay, you can see the short-term fractal showing you the pullback, another push to the downside, a pullback, another push to the downside, a pullback, another push to the downside. But the whole time, you know that these are only counter trend moves, very short corrective moves, and you're looking to get back into the trend, back in this direction. Again, a corrective move back into the trend downward. So very effective for telling you how to trade these markets and have a lot more confidence in what you're doing. Thank you for joining us for the price action indicator, and it's time for the ADX to move over because it's an antiquated indicator that is no longer should be used in favor of something that's a lot more effective, our price action indicator. Thank you.